Five questions, Craig. Five. You can give four, you can give three, you can give six questions that your LO or your loan officer, you're getting ready to make a big decision. You're going to buy your first house, buy your second house, whatever it may be. We've got a handful of questions that your LO probably isn't asking you, but we think if he were a financial advisor, he most certainly would. So, Craig, you want to jump on some of those?
You bet. Well, one of the first things we find a lot is we don't hear people who are buying a home or refinancing a home for that matter. No one takes their temperature, asks them about how they feel overall about their retirement. Where are you at today versus what your goals are? How on track are you for retirement? The first thing we hear people say is the basic question is to get a credit report pulled and what they qualify for on a mortgage, and they get a loan before they know it. They've made this huge financial decision, and they don't have any idea how it ties into their overall financial picture whatsoever. So the first question we don't hear a lot is, how do you feel about your retirement and your savings where you currently are right now?
Yeah, another one is, a big one is, how long are you going to be in this house? Talk about why that's important, Craig.
Well, if you buy a home or refinance a home and you use a mortgage product that is not well suited to your time frame that you're going to be there, you're missing out on an opportunity to maximize savings. You may still get a good deal on the mortgage product that you take, but it may not be the right mortgage product. And we see this all the time where we talked about it during the segment on interest rates. We think, oh, okay, well, I'm getting a really low interest rate. It's the lowest I've found from 3 lenders that I called. It must be a good deal, but they don't pay attention to the fees and costs. If you plan on moving in 2, 3, 4 years, number one, you may not want to buy the home you're looking at buying, but number two, if you're refinancing or purchasing, you got to look at the closing costs and fees associated with that loan, because you're probably not going to maximize your savings if you take a lower rate and pay more fees. It's the opposite that'll save you the most money in the short run.
Another big one is, do you have 12 months reserves or some lucky soul that in the event anything happens to you, they will without question wire into your account all the money you need to survive for 12 months. I don't think many of us have that lifeline. So if you don't, again, do you have 12 months reserves? That's a big one.
Yep, and then and that's, folks, it's huge, because reserves are what makes a good loan or versus a bad loan, or a healthy financial consumer versus an unhealthy one. Another big one, real quick, before we take a break, that we don't hear a lot about is, what are your plans for your children's college education? Because ultimately what happens is, if you haven't planned or helped them save for it, you're put in this position where you got this great kid who worked hard and now they need student loans and they want you to co-sign. When we talk about college education, here's why this one's a big one. I'm just going to make this final point before we give you the last one. It is an expense that ends up being quite a big expense that if it's not planned for at all or budgeted for, you can find yourself really scrambling. And I deal with this in my day-to-day job all the time. Folks have not planned well, then all of a sudden they're co-signing for some student loans that their student, their child that they love more than anything on this earth, who has tried to do a good job, who's gotten good grades, who's maybe done well in sports or whatever else, a good kid. They want to help the kid out, but they're scrambling now because they're co-signing, they're taking on some debts that affects their debt ratio. Maybe the kid isn't in a position to repay the payments. Now they're paying the payments to preserve their credit. Folks, this is a big one you better plan for. It's going to sneak up on you. What's the last one, Mark?
And the last one is life-changing events. So you're getting ready to purchase or potentially refinance this house. Why does it matter if there's a life-changing event, Craig? And what are some of the examples of those life-changing events?
We have all sorts of them, and all of us have experienced some or all of these. You're going to have a baby, getting married. Maybe you're upwardly mobile and you see yourself getting a major promotion at work. Maybe your company's going to downsize you. Maybe you're in an industry that you know the curtains are closing. Technology's replaced what you currently do, or it's starting to. Lots of things like this can happen, and if you are trying to see around the corner a little bit and looking at your life very, in a focused way, in a candid way, and say, you know what, yeah, we do plan on having a couple more kids, or I know I'm engaged now, I want to buy this home, I'm going to be getting married, probably starting a family, or maybe it's the whole job thing. We see this a lot where people try to not just own it and deal with it that, hey, my job is probably going to be something that's going to go away in a couple of years. These are all things that you need to discuss very openly, very candidly with anyone you're handling a financial transaction with.
All right.